22 of 22. I have the Dow Jones that has a total breakdown, the U.S. stock market overview. There are a lot of mechanical things, a lot of chart pattern. I can say that there is hope with a technical bounce because I haven't seen the Dow this oversold in a very long time. Now, on the S&P 500, which got cracked right here below the 200, I haven't seen it this oversold in a very long time. NASDAQ 100 broke below the 200. I have not seen it this oversold in a very long time, and I mean a long time. And on the NASDAQ composite, which is in bear market correction, is completely oversold. We are going to have a technical bounce, everyone, but let's go to the RUT, the Russell 2000. It too is extremely oversold, and the stochastic is at zero, set up for a bounce. The TQQQ ETF at record oversold levels due for a bounce. The QQQs, which broke below the 200, and they too are extremely oversold. But let me just tell you about chart pattern. When you have 0% stochastic, that's as oversold as you're going to get. And when they're that oversold, you have to know that these technical oversold bounces remain to be sold. The good hope is that everybody is scared about interest rates. There's nothing to be scared. They all have it wrong. Here's the IWN, the Russell ETF. Look at it. Straight down. I haven't seen this one this oversold forever. Okay. Now, the diamonds, which is another ETF, broke below the 200, and this too is oversold due for a technical bounce. Now, we use ETFs to sell short when markets go down as a hedge. But I want everyone to understand one thing. That 200-day moving average on the S&P is going to set up for one beautiful bounce. And the fear factor is hitting all-time highs. And I will show people how to do short-term trading when all of the technical indicators are set up for a bounce. I haven't seen the market this oversold in January. I'd have to go back to real big bear market years. And after 35 years, one thing that we did learn is doji reversal, straight down, breaking down, just obliviated. People have a lot of fears, and the fears are about interest rates. When interest rates go up, that is good because the economy is growing and zero money policy doesn't work. So when rates go up, that's not a bad thing. And after rates start to rise with the Federal Reserve, after a couple of rate hikes, then the markets will run up. So everybody has it wrong about interest rates and their fears. There is nothing to fear about rising rates. I will tell you, when interest rates rise, that is a complete positive to fight the inflation on. As many have said, we said this a year ago, okay, and here we are now, a year later. We've called it all. I've seen after 3 decades of economics and everything alike, is people sell, fear goes up. But I will tell you one thing, this market will rally really nicely again because the Fed will take the right action. And when they take the right action, history does show that markets can rally when Feds raise rates. There's nothing to be fearful about. The only fear that there should be is how you're going to handle yourself and what are you going to do in 2022. U.S. stock market will rise again, and it will. When the Fed takes the appropriate action, we will rally. Now, that could be a couple of more months of volatility. 2022 will have a lot of volatility. You have that downside volatility, but let me tell you, all my trading friends around the world, we will get very nice pops off of these lows. We have earnings season coming, and stocks are at their all-time lows. Some stocks are in bear market territory. They were simply overvalued, and we won't see some of those highs again for years to come. But I will tell you that when the Federal Reserve does its rate hikes this year, 3 or 4, and then maybe some in 23 and some in 24, what it will do, it'll fight the inflation. When you raise rates, that is because the economy is real hot, and there's no shrinking in this U.S. economy as of right now. Stocks have simply got overvalued. Now there's going to be new trading ranges and a whole lot to come in 2022. And we're set up for one big technical bounce. So when everybody has the highest fear in markets, that's when we get ready to buy the market. And we will, because things are oversold. Yes, we have been short equities for several months. And we have. And we told everyone on our website and the YouTube channel that you're viewing right now. If you spend the time to go through everything over the last year with all of our calls, you'll see we're 100% right to it. And listen, we're traders, okay? And we know that we made a fortune when the market fell. But we also know we can make a fortune because the market will pop back up. And everybody has it wrong about interest rates. Stay tuned, sign up, we're here for you. We give out live entry points, live exit points. The option trading will make you a millionaire right now in 2022, and it will. And when I call a technical bounce, there's still going to be volatility, okay? And downtrends or bear trends, let's call the difference between a bull trend and a bear trend. Right now, we're in bear trends. We're not in bull trends. It changed that dramatic, like we said that it would. We are 100% right. We've called every move. And if you want to open an account with us, we have the best software. We use Interactive Brokers. Once again, we will guide you through every point of this market. If you're serious about making money, well, then you're at the right place. U.S. stock markets will have upside volatility. So upside volatility would look like this. When they run up, that would be upside volatility. This is downside volatility. It started right up here at the top when we called the short. That is a doji. Okay, and we have a program on how to use dojis to manage risk. And dojis are confirmed when downtrends go. We had another doji right here, and then it fell straight down, and that was confirmation on the S&P 500 right here. So once again, we're in bear market correction here. And when we get into bear market correction, that's when we want to buy. And I'll tell you why. Bear market trends or bear markets that start make a lot more money than bull markets because you're able to get the downside volatility and you're able to get that upside volatility. We are buyers on weakness.